Joining me now is Caitlin Long, Chairman and CEO of Custodia Bank, which provides banking services to those involved in digital assets. Caitlin, welcome. So I know that you've got a different and more cautious approach to these markets. You know, I'm looking, you've got your own, what seems to be a stablecoin sort of issuance of it. Tell me, why shouldn't investors, though, be concerned that these issues with stable coins, algorithmic stable coins, might upset the entire apple cart, even for more responsible crypto assets?
Well, they should be concerned about the stability of algorithmic stablecoins or crypto-backed stablecoins, as last week's incident with Terra confirms for sure. That said, there's real technology in those of us who didn't play the fast money game, who are building for the long term and recognize that we can deliver better, faster, cheaper, and more transparent payments using these technologies. And when I say these technologies, I'm mostly limiting it to Bitcoin. I'm not expanding it to the broader crypto universe. These are powerful technologies that will bring us better, faster, cheaper payments. And most recently, I came across some data that Wells Fargo and JP Morgan, between the two of them, have almost a 50% market share in ACH payments and could go up to a markup of 100 times their cost is what they turn around and charge to their customers. This was, got to give a hat tip to Wise, formerly TransferWise, in a letter to the Fed, revealed all those statistics.
Okay.
And that just shows it's ripe for the disruption.
But, I mean, there are a lot of growth stocks that a lot of people consider promising. Shopify, for example, that are trading at early 2020 levels or even a bit lower than that. And if you had told some people in early 2020 that Bitcoin, you know, would go up to 15,000, they'd have been pretty happy. So do you have a point of view on whether Bitcoin belongs at 30,000 right now or 15?
Well, to the intro to this segment, I think price is the least interesting aspect. What I care about is
but it's interesting to people who bought it. It's interesting to people who bought it at 30. Okay, so
yep, sure,
so
that's
tell
fair.
Me,
that's fair.
Do you have a dog in that fight? Do you have a point of view on whether it belongs at 30 versus 15?
Well, we may very well see another leg down. I am worried about that. I don't make price predictions, but there's still so much leverage and so much just bubble dynamic. That we're starting to see that correction come from the periphery of the periphery into crypto, into the periphery, and then not yet to the core. But I think it could still go there because there's still a lot of deleveraging to do, just as there is in the broader economy as well.
So let's talk more about what you say is more interesting than about Bitcoin. What is the sort of positive use case and the businesses that we're going to see built on the back of it that are going to lead to a resurgence in confidence, not just in the price of it, but in the usefulness of it down the line? Is it NFTs type stuff? Is it something else?
No, NFTs can't be issued on Bitcoin. Bitcoin does one thing extraordinarily well. It's a very simple system relative to most of crypto. Bitcoin transfers value. And in particular, Bitcoin transfers high value at a very, very, very low cost. You could transfer billions of dollars for $1 or $2 in cost. And that's what it does well. And the scaling technologies like the Lightning Network in Bitcoin will allow us to move money. Instead of paying Visa and MasterCard 3%, you can move money through maybe only one intermediary instead of 5 or 6, which is what happens now when you use a credit card. And the cost and the speed and the efficiency are going to go way up. We are at the early stages of that.